Well, let's talk about fast food restaurants like Wendy's are experiencing a slowdown in business. The fast food restaurant Wendy's is planning on closing hundreds of locations throughout next year because they continue to see a slowdown in spending from their customers. Now, they say most of their low income consumers are cutting spending and making fewer trips with smaller purchases at the restaurant. So they're starting to feel that pinch on the lower end consumers saying, yeah, I'm going to cut back a little bit.
Yeah, and this kind of, I guess, goes against that lower end consumer when Wendy's increased prices, made it harder for them to afford potentially a Wendy's meal. But they did that again after the pandemic when there was a lot of costs that were coming into the system. And the interesting thing is that when they increased prices, it was at a higher rate than grocery stores. And now, again, speaking of competition, other fast food restaurants have begun to add value menus to keep customers coming back. But Wendy's has held firm and has not created any values for their customers. And because of this, they have seen their net income decline to $44.3 million from a year ago when it was $50.2 million. And the thing that I look at here with this competition, I know McDonald's has now really emphasized the value meals. There's just so much competition in this space. You know, again, we always promote the newsletter. I'm going to do a little plug here. We did another one talking about Mr. Colonel Sanders and KFC.
Yeah.
I mean, you look at all of these other players, they're going against, Chick-fil-A. They're going against this newer restaurant, Raising Cane's, Wingstop. I mean, there's been this introduction of what we call the fast casual space, not just fast food, where you're having your Kavas, your Shake Shacks, your Chipotles. There's so much competition out there for people trying to get a quick meal.
And competition is not good for a business because it means you got to compete, lower prices, and as you said, there's so much competition out there. You mentioned that they raised their prices. Wendy's did after the pandemic or during the pandemic. But if you remember, that's when people were getting all these free checks and everything else. Like, oh yeah, great, we got an extra $1,000. Let's go to get some fast food. Let's do this. So now those free checks are not coming in. And those lower-end consumers are saying, no, I have to cut back a little bit. So that's probably why it raised during the pandemic. They felt they could do it, but didn't think long-term.
Yeah, no, I mean, it definitely has been hurting them. And, one thing from our other post, I got to bring this up because I thought it was so interesting, but 26% of consumers eat their fast food orders in their car. I was like, what?
And I look over at Priscilla and Sarah. Sarah shakes her head. Yes, she does that. And I just, Priscilla? Do you eat in your car? Yes.
Well, and honestly, I mean, I guess my favorite fast food is going to be In-N-Out. I do think I feel the best after it. I think it's, cleaner than the other fast food places. It tastes good. But when you go there and you go through the drive-thru, you're like, will you be eating in your car? And they give you like a little mat that you can
Really?
use. Yeah, I remember at the Scripps Ranch location, they asked that. I was like, oh, I didn't even know that was a thing.
Yeah, I just don't like eating in the car. It gets the car all dirty and smelly. I just like my car is super clean. I'm a car guy. But over the past year, the stock has declined from around $18 a share down around $8 a share, which is a decline of, 55% on Wendy's. With a reduction in the stock price, the dividend yield is now over 7%, and the company trades at 9 times earnings on a forward basis. I got to say the company may, and I'm saying may, be worth looking into as an investment, as when the next 6 to 12 months we could see lower-end consumers stabilize. So there could be something here where, and I've always liked fast food because it's a pretty good profitable item. Maybe it's not Wendy's. Maybe it's Jack in the Box. Maybe, I think there was only 2 pure plays I can think of. No one McDonald's, obviously. Yeah. But yeah, I mean, there could be something there for investors. And have you had Wendy's?
I used to eat it in college. Harrison and I used to go get the junior bacon cheeseburger and a Frosty. It was a good deal.
I like their food. I just never think of going, and I don't do much fast food, but I just never think of, and aren't their hamburgers square?
Yeah, they don't cut corners, as they're saying.
They don't cut corners. But I don't know. There could be something there, for investors. I mean, it's something that I don't believe fast food is going away, even with the diet drugs. I still think people like fast food.
The thing, and I think McDonald's maybe has more of an international presence, but I mean, when you look at the valuations on a McDonald's versus a Wendy's or even versus a Jack in the Box, it is very interesting why McDonald's, I mean, I think the premium they're getting over a Wendy's is like 3 times in terms of what you're paying for the earnings. Like I want to say McDonald's trades somewhere in the 20s on earnings, where again, now you're at, 9 times forward earnings on Wendy's? 9 times. I mean, it is a huge discrepancy between the valuations on those two businesses, and I'm going to say a very similar space.
Yeah, maybe if you like Wendy's, go to Wendy's. Maybe look at buying the stock. But I don't know. Maybe it could show up in our portfolio. Who knows? So,